News door.
That's all you use, right? Okay.
Okay, what we got?
Yeah, somebody's got one for
That's it.
About showtime.
There's a snotty old hat.
Bill,
Present.
Curtis, Winfrey, Raymond,
Present.
Hanson.
Any public comments? Somebody got public comments? Okay, Randy.
We had a relatively busy month adding things. We added, continued to add some copiers that we're trying to finish off, and then 3 new vehicles, 2 2014 Ford trucks and a 2013 Chevy Impala. That's it.
That's it? Reporter.
All right, we are in the open enrollment for the vision right now. I handed the payroll stuff to Amanda. Any changes that will be made, we're a little late on that. It should be a 4-1. We should have done it in March. We're a little late, but it's no big deal to get everything changed for 4-1 if anyone's thinking any changes. Which prompts me to ask, do you guys want to look at putting everything at one renewal date and what date works best? Because we have the medical at 12-1, the dental is at 12-1 as well.
Yeah.
And then your life is 2-1, IMED is 4-1, and Aflac is 5-1.
Right.
And I can work with the carriers to get us on all one renewal date, so it's a little easier. It's up to you guys what date works best for you, and we'll go from there.
I say yes. Thank you. You're welcome.
Okay, then I'll get in touch with the carriers, and then I'll follow up with you guys and let you know where we're at. So it's the one the date we're looking for?
Yes.
Perfect. All right.
Thank you.
You're welcome. Have a great day.
Department heads. Lisa.
I don't have anything to
Collection went well?
Went very well.
That's good. Okay. You're up.
Well, nothing too terribly exciting, which is a good thing. Just been continuing to reach out to other agencies and local jurisdictions in the county and take some more online courses. Been coordinating with ham operators so they know how to let me know if there's bad weather in the area. LEPC, which we'll talk about later on. So yeah.
You don't have anything to report, do you?
Am I on the agenda?
Yes.
Yeah, later on.
Okay, it's later on?
I'll wait.
Okay. How about you, Tom?
One thing, we permission purchased a vehicle a few weeks ago, which was purchased out of a proficiency account. And also we are getting a few people trained in the airquake officer training, which is expensive, but again, that's coming out of fees. But that'll be done starting next week. We'll go to 13. But that's all.
Bob,
I don't have anything.
you don't have anything? How about in zoning, anything in zoning?
Yeah, Debbie's retiring.
I heard that.
We'll make do.
Nida, you got anything?
Yeah, I do. I just want to talk to you about legislation. I don't know if you want me to turn out the board or if I should just verbally do it. We can do that. Verbally is okay. Presently, legislation is trying for 87 cents, and that will actually go on landline and wireless.
Oh, that'd be good.
And as most people know, we get $2 on landline, so we're thinking, okay, that's a drop. But they've got a formula plan that will actually bring us back more money, and at the end, we're getting not quite $90,000. So this is legislation in the very beginning. It hasn't been presented to the legislature yet, and we're in the process of doing that, but it is a positive thing. I know in the past, the county board was told that 911 boards were dissolving, that Illinois State Police was taking over, and that type of stuff. None of that is true. They're actually trying to consolidate 911 boards. There's 203 911 boards in the state of Illinois. And as you know, there's 102 counties, so obviously there's a lot of duplication. And most of it is up in the Cook County area. So this legislation also talks about reducing that number We are fine on consolidation because we have one dispatch center and one ETSC in our county. And we could have up to 2 dispatch centers, so we are fine. Kankakee, an example, has 3 dispatch centers.
Yeah.
So they're going to have to do something, and I think from the rumor mill, I heard Bradley Bourbon here looking at joining together. So, and that will take them down to 2. But the rest of our surrounding area are good. This legislation also, part of this money will be used for a statewide network. It'll also be used for a statewide advisory board, which to our legislative committee that I'm on for state, we report to those people, and they have like a sheriff's association person on there. They want to put a fire person on there. The Illinois Commerce Commission is on there. There's 5 people representing 911 centers throughout the state of Illinois, depending on their size. There's telephone companies on there. I'm missing a couple in here. But those are different agencies, and that's to be, hopefully that board will be made up of the 911 advisory board, and they will be giving out grants, which will also come from this money. They are expecting us to be next generation 911 by 2020, and there will be grants available through the 87 cents that everybody pays throughout the state of Illinois. Because some people right now may only pay 35 cents because they have a large population in their county or their city, wherever the case may be, so that obviously raises our amount. That's one of the things that people are mad about because they don't think they should have to pay for small counties in the southern Illinois part. And so there is some resistance, and we're just going to have to see how well our legislatures do to help support us. I feel that 911 is a statewide thing. It's not an individual county thing. You use 911 no matter where you go, whether you're on a wireline or wireless. If you have family in southern Illinois and something happens, you're going to call a wireless or wireline to be able to get that. And I feel that that's something that people need to realize is that even though their county may be paying this amount of money, and they've paid less before, it's a service that's provided throughout the city. So we had to have legislation done by April 1st. We feel kind of a little bit better about this than legislation we've done in the past, simply because the legislative committee that I said is made up of telcos and the Sheriff's Association and 911 centers. One thing Representative Bradley made them do is to sign off on this proposal. So the telephone companies, the big toys, AT&T, Verizon, those guys, they had to sign off on this plan. So they were the ones that fought us before. So we feel by them signing off on this, it gives us just a little bit more oomph that we may make it this time. So who knows what legislation will do. We got between now and July 1st. But the proposal right now is 87 cents, no matter what type you have. That will go to the state of Illinois. I think right now Mindy probably gets 25 checks, 30 checks a month she probably gets for 911 services. That will no longer happen. All those will go to the state of Illinois, and this is the little scary part of it. It will be put into a fund that's supposed to be used for 911 only, and then that fund will distribute out the checks that we get, and they have a formula that makes it, since we get $2, compared to 87 cents, people get less than that, but we are still supposed to come out with $90,000 extra with the formula that they're using. They are also going to take off our network costs. They feel that they could get a better, more for the money, I guess, because of all the network costs that we pay. We pay about $64,000 a year on network costs that we pay back to the telephone companies to provide 911 service for Iroquois County, and that will actually be paid by the state of Illinois now. Our scare is the state of Illinois fails to pay their bills once in a while, and what happens if they don't pay our $64,000 bill and they got to cut off 911? They supposedly assure us that this won't happen. We'll see what happens on that. So, but anyway, that's also going to come out of that 87 cent pot that's going to be in the state of Illinois. So that's also a expense that we will not have to pay after July 1st if this goes through. So we're gaining almost $90,000, but we don't also have to pay $64,000 in network fees.
But these people that are complaining up north, they're paying down here. If they go down the interstate and they have a problem, they call 911 here through our services.
Exactly. And as an example, Representative Bradley is the chairman of the 911 Advisory Board, and I gave a little talk about our county and the financial status that we were in at one of the advisory board meetings, and he looked at me and he said, is there NARC in your county? And Bradley is from, he's down by Carbondale, someplace, Marion, someplace down there is where he's from. And I looked at him and I said, yeah, and he goes, I was in your county this week. He said, my car broke down. And I said, gosh, I wish I would have known. I could have helped you. So everybody is all over. And that's DuPage County is really complaining. They get $6 million a year just off wireless, and they put it in the bank. They don't even use it.
Oh.
They have $18 million in the bank because they get so much money because of their population. that they don't even use all their sources. So they're really complaining because they feel that their citizens are having to pay for us downstate. So,
But if they travel at all,
exactly. I said,
Whichever
you're
way
gonna
they
do my
go,
basketball
they're-
games as an example, you
Yeah.
go right through my county doing that.
yeah.
So, we'll see what happens. We'll see how powerful legislation is. And we feel that Madigan was involved in this. We feel that Madigan and Bradley have a good enough relationship that they may help us. Madigan has been a stumbling block for us in the past. And so we feel with maybe some of this, we might make it actually
Give it
come
a fair
out from
shot.
what we want.
Be nice to get a fair shot for a change.
But legislation, I'll tell you July 1st.
Okay, yeah.
Kevin, it sounds like what Nadia has presented here is something that if they get close, we need to send some type of support resolution
Oh, yeah.
to support it, because this looks like something that's very positive. Just looking at the funding change, because with the hard lines disappearing, when everything we're dealing with is pretty much based off of the hard line stuff from 25 years ago, this needs to be addressed. And if it flows out halfway close to where what you think it might be right now, it'll be very positive. So
Right.
it
When I
looks
did
like
my
something we'll need
presentation
to support.
judicially yesterday, John Scher told me that a lot of you have contact with Jason and also Jason Bergman and also Tom Bennett, and that I should make sure that we get to that point. They're telling us right now that the legislation is actually made, I guess is my verbiage, the bill is actually presented, that we're not to contact our legislators. But once that happens, then that's when we're supposed to. So I talked to Amanda, because she was sitting there yesterday with John, and I told her that I just get something out to Amanda, and Amanda's family going to go send stuff out to you guys when it comes time to either do witness slips or talk to your legislator to try to push to see that we can get this through. So that's in the process, but we haven't been told yet, because the bill hasn't been put up yet, so we can't hit that point. But I'm going to do a full presentation at the 911 board meeting, which is April 21st at 7 o'clock here. So if any of you guys would like to hear the whole thing of it, you're more than welcome to come to that meeting. I've got a PowerPoint, and we'll be going through all the steps of what this legislation actually will be.
Well, let us know, because we can sure put out a resolution when this comes up. 'Cause
Okay.
We need to support this, because
What time did you say that was?
April 21st at 7, it's our normal,
7 o'clock.
yeah, it's our normal 911 board meeting.
Hope so.
we're a little concerned with highway because they've hit the motor fuel tax again.
Very
And
helpful.
this is definitely going to have to get done.
Exactly.
But we need to be trying to do something.
Nida, have you heard anything more about, or what's the rumblings in your field about the landlines? You know, some of the major companies wanting to take the landlines away and have everything go digital. Are
Well,
those?
that's one thing with this legislation, with it being 87 cents, it doesn't matter, you know, what we get is 87 cents on a landline, so, or on a line. Granted, you know, we've got 20, off the top of my head, I think it's 21,000 cell phones in Iroquois County, and we have about 8,000 landlines. So obviously that's dramatically, because we started out with 15,000 landlines when we first started 911. And so that's obviously changed, and that's where we take the hit. They're aware of that, and that's something that they're looking at also with legislation of we know that everybody keeps dropping their landlines. So that may be coming, that they completely get rid of it. I know FCC, I think, is working hard on that to try to get rid of that, and that's, you know, who bought cell phones be like they were 15 years ago? You ever think that, you know, we'd all be running around like this?
Oh.
There you go.
I grew up with a party line.
I still send smoke signals.
Oh, do they really?
You probably are.
I always was concerned, like, the phones that Walmart sells and that.
Oh, that's another thing I forgot to say. Prepaid phones is what those are called. We presently get 1.5% on prepaid. The city of Chicago gets 9%. And so we did a proposal of 7%. Bradley would not listen to 7%, so it's gone down to 3%. And so that's what's in the legislature right now, is 3% for prepaid phones, which I think they estimate about 18,000 that we're bringing to our county, which is included in this 90,000.
Do you think they really track them phones good enough? Do we get enough? Or?
No.
I-
We know that.
that was
We know
my
there's-
concern.
We know there's a lot of uses of 911 that are out there that is, I mean, we try, but you have to depend on your telcos to do that, to try to hit, to make sure that we get our money back, and that's something that everybody's trying to work on too. I'm sure there's some that don't pay a cent, but we're trying. Prepaid was one that prior, half of them didn't pay.
Yeah.
You know, but now we picked that up, so there's always more gadgets coming out there that's called 911 that we're not aware
I suppose. Anybody got any questions? Thank you. You're up.
Okay. The tax cycle is progressing. It's in Lisa's office right now. She's been working on that for a while, and her goal is to roll towards the end of the month. And my goal would be to have tax bills in out by May 1st, but that's what, that's just kind of a goal that we've set for right now. Also, Mr. Henson has a copy of the solid waste CD is coming due this month, and I just wanted to know if the committee wanted me to go ahead and renew it for another 12 months at the best rate I can get.
We can't spend it, right?
Very
Well,
restricted. So if that's okay with the committee, that's how I'll proceed when it comes due.
That's the best rate that you can get.
Right.
There's no rate on it.
I do have some suggestions, and I can't, was it you and I that talked about the whole recycling thing? How much money is in there, like,
This CD is $157,086, and then $117 in the fund also.
well, because, you know, we have the representative in the center is doing the recycling event on May 2nd, on a Saturday, for the computers and stuff, and this will be the last year that they'll be able to do it for free because all these companies now want to charge a fee because they have to pay to get rid of like the mercury and stuff out of the computer. So I'm wondering if this event is very successful again this year, because last year it was so successful, we ended up with 3 semi-loads full of electronics from the recyclers. So next year we'll probably have to pay a fee for that, and I'm wondering if this is something maybe the county could sponsor and pay that fee to get our electronics sent out and recycled so they're not ended up in our rivers and ditches. Just a
Sounds like a
thought.
positive idea.
Mhm.
We'll see.
I'm not sure how
Funding
much...
fails on the other first.
Yeah, well, we keep asking for the free stuff. It was tough to find one. We finally got, Kankakee Best Buy is going to do it. So, but next year, I don't,
TVs,
the TV, the big, I call them the big
Yeah.
bubble TVs are the issues right now, I guess. They don't want to take those.
the big screens.
The big bubble.
Big
TVs.
old plasmas.
Oh, yeah.
God,
I
it weighs
don't
a
know what they're
ton.
called. Yeah.
So, what do you guys think we should just go ahead and do this for a year then, like she recommends?
Yeah.
Anybody want? Do you need a motion for that, or just verbal approval? That's
However
fine.
you want to handle it.
Sounds like a good idea to me, so. I don't think anybody can complain of getting the best interest,
Yeah,
even though it ain't much.
I know.
What is it?
Right now, it's currently at 0.75% is what this particular CD is at.
I mean,
I know.
I doubt it.
They charge you 4.
Yeah.
and get 7, or get 3/4? Pay you 3/4 and charge you 4?
Okay, that's all I have.
That's, you're up.
I'm up? Okay. Hi, everyone. My name's Hope Wheeler. If I haven't met you before, I think I've met most of you. I'm principal with Clifton Larson Allen. Just here to present the results of the fiscal year 14 audit. And so I handed out 2 reports today. I'm going to go over the letter first. It's a 2-page letter to the several-page letter to the Finance Committee. This is a required communication that we give to you annually. There's just certain topics we're required to communicate to the Finance Committee or board. Just to go over a few items in this letter, the first section there under accounting policies, there was one new accounting standard called GASB 65 that was adopted this year. If you compare last year's financial statements to this year side by side, you'd see a difference on the statement, the balance sheet, and statement of net position on page 9. Just really had to reclassify certain liabilities down to another title called deferred deferred inflows of resources. And then accounting estimates for that subheading there were no significant accounting estimates. If there were, I'd explain those to you and how we determined they were reasonable. And we had no significant difficulties in dealing with management and performing and completing the audit. On page 2 of the letter, the paragraph at the top is called uncorrected misstatements. What that refers to is there were a few small adjustments, potential adjustments found, and we accumulate those. Those are attached to the back of this report. They were small items, small enough they didn't have to be posted, but we accumulated so you could see what they were. If they grow to a large number, then those are required to be posted and reflected in the audit. The next heading is corrected misstatements. There were less audit adjustments this year as a result of the audit. There were several provided by Anita that we just got after the trail balances were received, and we found a few items. They were not significant. There were still several significant adjusting entries for the Fort Iroquois Public Health Department. Those are attached to this letter. I will say a lot less number-wise adjusting entries even for the health department this year than last year, but there were still some adjustments. Some of them are just reclassifications between revenue accounts or expense accounts, so no effect on the bottom line. But then some were some corrections, and one, the most significant one you'd see attached to this letter here is, we audited them as of June 30th when they dissolved, but then there was still quite a bit of activity from July 1 through November 30th as they were trying to wrap up, get all receipts in and pay final bills. And so that, all of that wasn't really summarized, so we had to summarize that and record a journal entry to record that activity. And then at the bottom of this letter we mentioned the 3 findings that we found as part of the audit, and I'll go over those when we go through the bound financial statement. All right, as far as the bound financial statement, as usual, this is a large report. It's 99 pages, so I'm really just going to hit some highlights. So stop me if there's something you want more detail on, and we can try to answer any questions there. I'm going to start with page 2. Page 2 is the result of the entire audit process, and it's our opinion. We give multiple opinions because there are various opinion units with a governmental entity. But here at the top of page 2, we're saying, in our opinion, we believe these financial statements are fairly presented in accordance with generally accepted accounting principles, or GAAP. Right below that, I want to point out, once again, if you laid last year's audit next to this year's, one difference you would see is that we moved 3 funds. None of them are major funds, but 3 funds from being classified as an internal service fund to a special revenue fund. It was workers' comp, unemployment, and liability insurance. So those 3 were grouped with a certain fund type last year, and they're just more accurately reflected now as a special revenue fund. So still in here, just classified a little bit differently.
Hope it says see note 16. Where's that at?
That is on
It looks like
page
footnote.
44. Yeah. That's the very last footnote where we explain we moved the beginning fund balance of those 3 funds from the internal service fund grouping into non-major governmental fund grouping. Okay. Then the next section is called the Management Discussion and Analysis, or the MD&A, and Anita prepares that part. That'd be, if you want a good summary, that might be the best 5 pages there to read through. What I like about that is it shows current year information as compared to prior year, where the rest of the financial statements aren't comparative because it's so large. But that's the MD&A if you want to read through that. It's a good summary of the fiscal year as compared to prior year. But for just current year, fiscal year ended 11/30/14, if you turn to page 9, that's the first page of the actual financial statement. This is the statement of net position, which I still just want to call the balance sheet. This is on the full accrual basis, so meaning this would include any receivables, any funds due to you by the end of at the end of the fiscal year would be recorded as a receivable here, and revenue and any payables, any liabilities at the end of the year. Those are recorded here on the full accrual basis. Later statements are on a different basis. That's the reason I point that out. But so here you can see your governmental activities, which that's the majority of your funds fall under the governmental activities. Your total assets there of approximately $71 million. You can see a large part of that is in your cash and cash equivalents. Taxes, property taxes receivable, and then the largest number being your capital assets. Then there's the business type column. I'll go over that on another page where that's broken out in a little more detail. Your total liabilities there, $1.8 million. That's, as I've discussed here before, I think that's a very low number. There aren't too many I go to where there aren't bonds payable or other notes or debt payable, capital leases payable. So that's a nice low number in your total liabilities. The new item I talked about was that new GAS 365 being adopted and this deferred inflow of resources. That equals that property tax receivable number. We're required by the way the standard's written, that's just showed as a deferred. We show the receivable, but then we show it as a deferred liability also, or deferred inflow, because that money won't be recognized as revenue until next year. Then your net position is just the difference between your assets and your liabilities and your deferred inflows, and that at the end of the fiscal year is the $64 million. And you can see it's broken down into what part of that is invested in capital assets, what's restricted for certain types of spending, and then the unrestricted components. Page 10 and 11 is the statement of activities, or your net income statement, profit and loss statement, full accrual basis again. So at the bottom of page 11 is where it shows, which I think these statements are hard to read. This is the format you have to do them in. The change in net position is the third line item from the bottom on page 11. So for your governmental activities, once again, the majority of your funds, the net change on the accrual basis for the fiscal year was a positive revenues over expenses of the $568,000. Now, on page 12, this is where we get into, and really the rest of the statements are on this modified accrual basis of accounting, which is what accounting standards, this is the way they want the report shown. So here, the main differences are in these modified accrual statements is capital assets, or capital outlay is expensed, not capitalized, so you don't see capital assets on the under assets. And then your receivables, if they're not collected within so many days, if the leap year policy is 60 days after year end, they aren't recorded as receivables. So that's your main difference, is your capital assets and some receivables.
About the only receivables that don't fall within that 60 days are the probation salary reimbursements, which are, 9 months behind in payment. So we only count what's due to be received within 60 days, which was, I think, 0 for this year, and everything came after that. That's really the only receivables we have that fall into that full accrual as opposed to modified accrual for receivables, other than the tax levy.
So here you can see we have to do calculations of what funds are considered major. So these funds you see listed here on page 12, the general fund is always major. County motor fuel tax was calculated as major. IMRF fund, county highway fund, and matching tax fund, and then the Iroquois Public Health Department fund. So those are your major funds. We have to kind of audit those individually with scopes at that level. Oh, and also, I'm sorry, the Fort Iroquois Public Health Department fund also shows there because of the activity during the fiscal year.
What are the non-major government funds? Is that like the 708?
The non-major is a summary of all the rest of the funds. The detail of those is in the back of the financial statements, starting on page 60?
Yeah.
60. So it's historical documents, indemnity, county bridge, township, there's a lot of them. Circuit clerk automation, county clerk automation. primarily smaller special revenue funds with restricted revenue sources. There's also, I think, a couple of capital project funds.
Dispatch, court security, and that's where the 3 insurance funds were moved from special revenue into these, from internal service funds to special revenue funds.
That's a great question. So if you want to know where the non-major governmental fund is coming from, the detail starts on page 60 for both the asset side, the balance sheet side, and the income statement side. Page 14 and 15, then, for those same categories, is the statement of revenues, expenditures, and changes in fund balance. So for each of those major funds and then those accumulated non-major funds, you can see the revenues and expenditures for the fiscal year. If you look at the bottom, or if you look at page 15, you can see then what the fund balance is for each of those funds on a modified accrual basis. And then the third line from the bottom was basically the net income or loss for the fiscal year for each of those funds. Grand total governmental funds in the far right column then, close to break even, but positive revenues over expenditures for the fiscal year of $88,000 on a modified accrual basis. And you can see all the fund balances there at the end of the fiscal year are positive fund balances. None have changed to have become negative. And I believe that's the case even within the non-major governmental funds, that $4.1 million. I don't believe that any of those individual fund balances were negative. If there was, it was only a very small amount, but I think they were all positive fund balances.
There was no negative this year.
Okay. Then page 17, the business type activities that I passed over up front. This is the breakdown of the business type activities. And that is made up of what's called the enterprise funds, or the more business type funds. That's the 911 fund and the county farm fund. So those are accumulated there together on page 17 in the enterprise fund column. And then the one remaining internal service fund is the group health insurance fund, and that is the second column of activity there. So you can see the assets and liabilities and net positions for those funds there. And on the next page, page 18, shows the revenues and expenditures for those for the fiscal year. You can see both of those funds did have expenditures over revenues in total for the fiscal year. The third line from the bottom, the change in net position. $58,000 for the enterprise funds combined and $41,000 for the health insurance fund. But that's the fund, I believe, that used to have the negative fund balance. So at least it's still, you can see the positive fund balance at the end of the fiscal year of the 114. The next section, big section, is the footnotes. I'm not going to go through each of those. There were no new required footnotes, and we did add that note 16 that you'd asked about, explaining the movement of those funds. And we did talk about the dissolution of the Fort Iroquois Public Health Department to explain why those numbers have dropped down. Then on page 46, there's certain other required supplementary information that we have to put in the audited financial statements, and that's for each of those major funds. We required a major special revenue fund or general fund to show the budget versus actual. So I know the general fund is a big fund, that's always of interest, so to see the budget and actual final audited figures, that's on page 46 and 47. The one thing I want to point out here is for accounting purposes, we consolidate the general fund, and you call it the MIS fund? The MIS fund, IS fund. That's, for accounting purposes, it's required to be consolidated with the general fund. So this includes the revenues and expenditures, including the budget and the actual of both of those two funds combined in this. You can see total revenues there, the first subtotal. Your actual revenues exceeded your budgeted revenues by $418,000.
Which was good because we had a lot of departments go over budget, right?
Well, total expenditures is the second line from the bottom. in total expenditures for the year, in total, for all the departments, your expenditures were under budget by $13,000. And you can see individually what the different line items are that were over and under budget. None of them too significantly one way or the other, but so in total.
Yeah. Wait, let me just say, the IT fund is added to my department. It's in the finance department, so we took the IT fund, and that gets added into my department, so that's why that number is so high.
I was teasing her that she spent too much money.
And we did. I mean, last year was the new server and all the new switches and IT, so.
Hopefully we're gaining on this, but we don't have the maximum. We didn't realize we had a number over there.
So on the page 47 then for the general fund, the actual column, third line from the bottom, on the modified accrual basis, that shows that net positive revenues over expenses fiscal year of $113,000. I won't go through each of the major funds. At the back of the report, or the main audit report on page 83, there are two other reports that we issue here as part of the audit. Because you have over $500,000 in federal expenditures, we have to do the single audit. So then that requires two other reports. The first report is basically your internal control over financial reporting and compliance with laws and other matters. And here, these are both clean, unmodified opinions. There are a couple of findings reported, which I will go over with you in a second. They are at the very end of the report. The second report is on page 85, and that's a report just over the federal funds that we tested. We go through calculations to determine which federal programs we have to test, and this year, once again, it was the WIC program, and so we tested that actually as part of Fort Iroquois Public Health, and then again as part of the new Iroquois Public Health. And there was a couple findings there, which I will go over in detail. Just to point out, that threshold is moving up to $750,000, and you're below that right now, so you may in the future, unless there's a lot more federal funding coming in, might not have to have the single audit done. Okay, the findings that I mentioned start on page 93. Good news is, last year there were 5 findings. This year there are 3. So 2 findings have dropped off. The first one typically here, that's usually here that hasn't been, that was removed this year, is we've typically had a finding about our preparation of the financial statements, and in the past sometimes too about significant adjusting journal entries as part of the audit process. And that with Anita's continued involvement and learning and studying government accounting standards, that has improved each year, and she prepares most of the journal entries to have the books on the GAAP basis when we get here. And although we still prepare the financial statements, Anita feels she has the understanding and capability to do them if she chose to do that down the road, and we feel we've seen the questions that were asked and things, and we believe that that's the case. So we removed that finding about the financial statement preparation and the adjusting entries. This finding here, the number 1, decentralized office, this one relates, you've heard me talk about it before, but a couple of the smaller offices that are decentralized, there's just a limited number of people in the offices, so they aren't necessarily always all the detailed reviews that we'd like to see. So we mentioned that here again in regards to the recorder office and the sheriff's office. So anything you can do just to help having second sets of eyes on things, reviewing and signing off on things in those departments would help in that, alleviate that issue. The second finding you've seen the past couple of years too, and this relates to Fort Iroquois Public Health Department. I will say this finding has also shrunk greatly too. It used to have maybe 10 or 11 bullet points, and it was down to 6 this year. But we still ran into some issues of bank reconciliation, still including some unreconciled variances. So then adjustments were just made to correct those. several instances where employee time cards didn't have the documented approvals that their control process dictated that they should have. There was payroll registers were also approved, and one of the ones we tested, there was no approval on a payroll register. And there was a bi-monthly report that we could not trace to the general ledger. Overall, I believe the number was in there because there were amounts on there, but I just couldn't trace dollar for dollar this into this report, the payroll register into the general ledger, and neither could anyone there. So,
But the money was there, it's not missing.
yeah, it's kind of the other direction. It's not, it wouldn't have been missing money. So, and then there was a check that cleared the bank that only had one signature when we were looking to see that the two required signatures were there on the checks we tested, and there was one that didn't have it. That did not appear to be a suspicious check. It just only had the one signature. And then we made material adjustments as part of the audit process. The response to those is essentially this entity, as you know, is dissolved, and now the new entity is under all the controls of the regular Iroquois County.
But that's shown in June 30th.
What's that?
The for Iroquois, is that June 30th was the cutoff date on that?
June 30th, was the dissolution date, but then there were still around,
Outstanding.
350,000, I want to say, outstanding at June 30th, or sitting there in cash that got moved into an escrow account, and then receipts kept flowing in and payments kept flowing in, or payments were flowing out of that. So we still show that activity through November 30th. Then at November 30th, we still show around $9,000 left that's sitting there to pay, I think, final bills. Hopefully that'll be closed out soon this year, this fiscal year for sure.
Don't just open it enough page.
Well, and if you look at this, I mean, really, if you look at the findings, these findings are not on the Iroquois County.
Right,
So we
right,
could
so forth.
theoretically get rid of, the goal is to get rid of both of these as well. And then that would be fantastic.
Yeah.
That would be really good.
Yeah, because the last finding 3, which you're probably referring to too, is
Right.
specific to the WIC, or Women, Infant, Children program, tested at Fort Iroquois Public Health, where there's still cases, we've ran into this almost each year, where some of the controls aren't working properly, where they're supposed to get sign-offs on certain, client forms. They didn't have all the proper sign-offs on them, client certification forms. And we did the same testing here and did not run into any findings related to it. So that was certainly the positive direction there.
Does that mean like immunizations were given? They don't give immunizations, do they? WIC is the food.
Yeah, it's that food, and it's more ties to making sure that the people that are receiving it are eligible, making sure they've done every step to make sure this is an eligible participant. So that is the end of that report there, and like Nita said, drops the number of findings, and maybe it can drop more in the future. With dropping off those 2 Fort Iroquois Public Health Department findings. That was a breeze through the 99 pages. If someone, and I know I just brought this to you, so if someone has questions, let me know. I'll give you kudos too. This is my first county delivery, so getting this delivered in early April, mid-April is good, I think, to get it turned around from the November 30th year end. Some were just actually starting, so I appreciate you working hard to get everything done quickly and getting it closed out so you have your final numbers and can move on with your next fiscal year. Thank you very much.
Making your job easier then.
Yeah, it is.
Well, that would be reflected in your next bid.
I get that question every year. We reflected it somehow this year. I don't remember the details.
You do charge us a lot of money.
It takes a lot of hours. It really
That
does.
would make it, we're saving you some time, right?
We've made moves that should be cost effective for us and you guys too, so that's good.
Yeah.
And time is money.
Cut the single audit, and that will definitely save money,
Yeah.
because that's a lot of testing.
What do we have to do
Cigar
to do
box.
that?
Well, the single audit, it's defined by how much you get in federal grants.
Yeah.
So our WIC program, I think, is it total? Over $500,000 is the current threshold. But this year, they are changing that to $750, and we'll be below the $750, so then we won't have to have that whole back section on the grant. So that's huge.
Yeah.
If that goes away.
Because right now, I think you were at maybe 650 this year. So as long as it doesn't grow too much, then.
Which, in theory, I mean, I don't know that, I mean, the big federal grants that we get are WIC, Family Case Management, and
Yeah.
the third one,
Like the Healthy Families.
Healthy Family. So, if you think about those, what's going to change dramatically within this county that would increase the number of participants substantially over the next year?
Yeah.
I would think
Probably not.
But
Yeah, because our population has declined, it hasn't went up.
Yeah, as long as they didn't somehow start funding you more, which is unlikely too.
yes. So even though IMH, it's important to remember, even though IMH is doing the work for those 3 programs, we're still responsible as the grantor, or grantee. So we get those grants, we subcontract through IMH, so Public D really is still responsible for ensuring our public health department that it's being done correctly. And she's got checks in place to make sure she's reviewing what they're doing to make sure it's done according to the grant, according to the regulations, all that. So that's all being done. That was clean this year for that portion. So we just need to move forward, making sure all those checks are still in place.
And the other thing to watch for is sometimes there's little kind of outlier grants that can pop up. If there's IEMA funding, or sometimes sheriff's departments get some federal funding that's flown through the state, making sure you don't get anything like that of significance that would have to be included as federal dollars. Well, thank you very much.
Thank you. Keep that in mind.
Okay,
Cautious of the weather.
you're up on IMRF.
Okay, IMRF. We received this month a couple things from IMRF. Do you have your sheet?
I do.
The IMRF reserve statements, and they prepare these once a year. Here, gentlemen.
Yeah.
That tells us where we're at in terms of each of our IMRF plans and what our reserve balance is, our ending reserve balance. I put the ECHO plan on top, the statement on top, because that's the one that, of course, we're the most focused on. We made huge headway this year. I will say this, we really count on the investment income from IMRF while the employee pays, ends up paying a 4.5%. A county typically, or municipality, ends up paying about 20 cents, and about 70 cents, 68 to 70 cents of the expense of the pension comes from the investments IMRF makes. So, and usually, sometimes, historically, they've done very well in their investments. Last year was like 13% return on, this year was 5%. So I don't know why it was so low. To me, I know, whatever. But, so they target what they plan for every fund is that you will make 7.5%. If they make more than 7.5%, there's an extra line where we get credit for that. If they make less than 7%, every single account gets charged the difference between 7.5 and what they actually earned. So this year, they earned 5%. So what you see, I'll explain it on this first one. You see the first line, well, it's a little misleading on Echo because you get charged 7.5%. So we get the 7.5% charge right there on our opening balance. And that is on your balance 12/31 of the prior year. So we got charged 7.5% of $1,143,000, which was our opening balance January 1st of 2014. So we get that charge, and then the residual investment income earning, that extra $17,000, that's another 2.5% charge because they only made 5% instead of 7.5%. So we got extra charges this year, I mean, about $95,000 worth of interest charges this year on that account that hurt us.
I wonder if that was 11% full, that when we first started going after this.
I don't know.
Yeah, you probably weren't here, but it was a lot, because we were unfunded the whole amount.
Right. I mean, 2 years ago, when we started making the extra payments, that opening balance was negative $2.5 million. So we've made huge strides. We had good luck with the interest investments. We made the extra $600,000. So what you see as positives against paying down this liability is the $237,000 that we made in regular payments that we were required by IMRF to make, and then you see the extra $600,000 payment that we made in November. So our ending balance at 12/31/2014 is $409,000 negative. This year we'll make $156,000 in our standard payments. We're going to get charged 7.5% on that $400,000 payment, so $30,609. So our estimated payoff amount, November of 2014, would be $283,382. So we levied an extra $600,000 to pay against this, and what I'll do in November is take $283,000 and pay it against this balance. Now, I can't say it's going to be zero because I don't know what the interest is going to be for the year, and I won't know until next March. That's when they announce what their earnings actually were. But we'll be darn close to being paid off. Very, very close. So, we can have this thing done and off our plate. The next page is the regular reserve account. That's the regular IMRF. Both Tier 1 and Tier 2, it's all in one account. You see that activity. The thing that's here, that's a little different here this year, you see transfer accounts, employer dissolved, $1.4 million of a liability coming in. That's the dissolution of FIPHT. Let's see, the other thing you see are what we're charged at retirement. These are the people that in this account, in this plan, filed for retirement this year. So you get a one-time charge the day they retire for what the estimated payments are going to be to them. So those are all negative. She can take her retirement from the because it's a different employer. Next page is SLEP. You see that one, nothing unusual there. 2 retirements out of SLEP this year. And then the last page is, this is confusing. There were some enhancements made to the SLEP plan some years ago. It is not Tier 2, which reduced benefits. It was additional benefits that went into SLEP. At that point in time, the employers wanted to know from IMRF what those enhancements cost the employer. So it is features related to changes in the SLEP law many years ago. Enhancements. So you really, to look at SLEP, you gotta add these two pages together, is all you have to do. So, but what I show and what I've written there is taking the additional amount. We levied $600,000 extra. We're going to use $283,000 against ECHO, and then I would propose we pay $316,000 against this unfunded negative asset here to get this one paid up as well.
In a couple of years, we'll have this puppy down where
Yes.
we give some people some breaks on this.
Now this year, what will happen, the one thing Hope didn't talk about is there's a new regulation this year related to IMRF. So in the full accrual basis, which is those first few pages of our financial statements, we will have to book an unfunded liability for any, or an asset, unfunded asset, for whatever the estimate is for this as of 12/31/2014. Because here's how the regulation works. IMRF has to get audited for what these numbers are. And they're working on that right now, and they're going through that audit. Their audit is as of their end of their fiscal year, 12/31/14. Okay? That's going to be their last audit before our fiscal year ends in November. So what we have to book in our financial statements is any unfunded liability 11 months earlier, which personally I disagree with that. We would never, for any of the other estimates that I have to book, they would never accept an estimate 11 months before. That makes no sense. But that's the way the regulation is written, is that it has to be an audited amount from your pension, I don't want to say company, but your pension plan, from your plan, okay? So we will have to book a liability come November 30th for the point it's at right here.
Well, these people keep a lot of lobbyists down here in Springfield, don't they?
Yeah. So anyway, this is where we're at. We're making fantastic progress. And actually, if you look at, I think it's footnote 6 in the financial statements, we actually have a pension asset. We're overfunded based on where we should be, not for everything that's owed, but because we're making these additional payments right now.
And just
So,
in case anybody wondered, because I always wondered, we're paying this extra money, what happens if the state goes bankrupt on their pension plan? We're separate. So this is great.
yeah,
This
the
is great.
state plan has
It's
no
great for our
impact on it.
taxpayers. When we get this paid off, we can cut that, and it's great for our workers because they know they're secure. So, I mean, it's untalked about, but this is great for our people all the way around.
So the other thing I did get is preliminary, and since I've been here, our preliminary rates, we've got the preliminary rates for our employer portion for next year. That comes out at the same time. Once they have your reserve statements and they understand where you are, then they calculate your rate for the next year. I've never, this will be my third year end, and the preliminary rate always turns out to be the final rate. It would just be if they found an error in here somewhere during their audit, which would be unusual. But you can see here the employer rates for regular IMRF. This year we're paying 9.86, next year we'll pay 9.93, very close to the same, a few hundreds off, 500s off. SLEP, we're paying 21.13 this year as a percentage of payroll each month for the people in that plan. That will go to 22.83. ECHO is on here. I'm sorry. ECHO is on here, but that should be gone by next year. we may have to pay, depending on what the interest comes through, we may end up having to make 1 or 2 payments next year if the interest is lower than the 7.5%, but it will likely not be applicable to us.
The amazing thing is, that ECHO plan was unfunded. We had the whole debt, and it was almost done when we started going after this. And next year, we're going to have this paid off. So that's phenomenal with the economic crisis we had.
So if you think about that extra $600,000 that we're levying right now for IMRF, say the IMRF levy, which was $1.5 million this year, Dale, what, $1.6 million?
No, that's more than enough. Let's go with that.
Yeah, I don't know. I mean, a drop of $600,000 to the taxpayers will be very noticeable once we get this cleaned up, which could be as early as next year that everything is clean. So, very, very good news.
Because we never had any idea that nothing was ever paid toward that ECHO plan. I mean, we just paid the interest. Well, geez. Living out of debt's going to be a great thing. Is that it?
That's it?
Okay, I can.
Kyle, after the last board meeting, and now I don't know if he's my friend or not, because he did not tell me this was the meeting that you were receiving your audit, so a little bit concerned about that. It's a 2-page handout. They're not stapled. I wanted to be able to flip, so if you just take a packet. And this is where you learn that I'm not a salesman at all. So I'm not asking for additional funding. Really, what I wanted to come and talk to you about is not having the county not reduce our funding where you may be able to. And the easiest way for me to illustrate this is if you go to the back of the cream-colored sheet. ICANN Regional Office is a joint agreement in terms of our funding with Kankakee County Board and the Iroquois County Board. And when we came together as the ICANN Regional Office of Education in the early 90s, they looked at the EAV of both counties, and that's where a 24% Iroquois County, 76% Kankakee County, that's where that ratio was born. Things that aren't in the budget, my salary benefits aren't in the budget, the assistant regional superintendent isn't in that budget, and also none of the grants that our office engages in can have any county fund support, and that's an office decision, so that anytime we do pursue grants, they have to be self-supporting grants. We don't do grants that cost money to either county or other regional office programs. So since we're a joint agreement between the two counties, the issue comes when both county boards don't approve the same budget, or when the two county boards, either county board makes adjustments during the year. And if I just illustrate what happened during FY14, it's the table at the bottom of that page. Initially, you can see where the budget was approved by both counties. In March, Kankakee County had a budget adjustment for all general revenue departments, and what that did is it reduced the 24% of our total budget would have gone down as well if you reduced the 76%. At that time, sat down with Mr. Kofus, and he had said that the county board had approved a budget, and that's the budget that they were working within. So that's where you see that extra $21,000 on the very far right there. Well, it turns out that the county board adjusted our budget again at the end of the year, so you can see that all of those numbers have been a moving target during FY14, which makes it difficult for us to run shared budgets. you can see that the bottom line for Iroquois County never changed because of the decision to use the initial line item. So now, looking at the white page, Iroquois County approved a different budget than Kankakee County approved. And what we're looking at, and while the meeting was going on, I was texting back and forth because I had a question on our Kankakee County budget, and it seems that it's not finalized yet, and they're still working on our bottom line number. But as of today, as I'm sitting here talking to you, what I believe the difference is when Kankakee reduced funding to our office from 366 to 307, that changes a liability for the Iroquois County by $13,000. So my question is, I'm not asking for more than the $66,816 that was approved back in November. What I'm asking is, because I want you to be aware of the other side of my budget as well. And the question before I expend any of the $13,000 or nearly $14,000 is Iroquois County looking to reduce our budget because of the actions of the Kankakee County Board? Does that make sense? And I apologize for, it seems very convoluted, but...
My question is, if this was an intergovernmental agreement where we pay 24%, they pay 76%, how can we pay the same amount? That's a legality question.
And in the past, what has happened, because we have always, Kankakee has always run a separate budget strictly for truancy services. So when you look at those two blue columns, you see that there's a core budget, marked FY15 budget, and then there's an FY15 truancy budget. So we have, as an office, always had supplemental funds for special projects that were approved by the board. And that's really, so this year they're continuing to approve that. So Kankakee is continuing to approve some additional monies for truancy, and that's to hire more caseworkers in Kankakee County, where we have a higher rate of truancy. That would be the same way that we would treat that $13,986 from Iroquois County, if that was the favor of the committee.
So is Kankakee County cutting your budget based on their budget crisis?
Yes.
And when we went through our budget crisis, we didn't chop you like that. We understood the importance of education.
You are correct.
Yeah, man,
Yeah.
you look at the scope of their problems, they got some serious issues.
Yeah.
I don't know how
Come on, find out the credit thing, good.
We'll have to look into this, see what we can legally do.
Yeah, I don't think we can give you an answer today.
Okay. Well, I just want to, that's my standpoint, is I just want to be completely transparent with all of you as we're going in here. And this is kind of the complexity of a joint agreement. And you're right, when you're in good times, there's never an issue, because when May 30th comes around, you can approve a budget. When you're in rocky times, yes, Kankakee has adjusted their budget multiple times last fiscal year, and I believe we're going to see adjustments this fiscal year as well. And so anytime that they make an adjustment, a dollar loss from Kankakee is $1.25 for the regional office, because we have to reflect that. We've tried to help them understand that, but
These intergovernmental agreements can be an ugly situation, we just went through. I don't know.
We're not putting you in the health department.
I'd appreciate that. Although I can bring my audit if you'd like to see that as well.
Greg, did you have a
We,
chance to plead your case with them, or did they just go through and did their chopping?
They did bring us into a subcommittee of the Finance Committee. I was there, I know Tom was there on the same day. And while they listened to the preliminary numbers didn't change after the hearings that they had.
I guess my question is, a budget crisis such as ours and such as Kankakee, sorry, my last cough there. The future of the taxpayer is in our children. So if we don't educate our children, how are we going to have skilled workers for our workforce? But anyway,
It
that's
is a
spoken
trickle
as a
down.
former
It
educator, I
is.
guess.
our other pickle is we don't know where we're at with the proposed cuts by the state now.
Yeah, we got.
Well, yeah.
It's hard for us to make any kind of, but our history has shown we do care about it.
Oh, absolutely.
Which is the next thing on our agenda.
So,
I was surprised population was not in the original formula, it was just on evaluations.
Well, because the population certainly has shifted a lot.
Well, yeah.
We fell under 30 and...
Kyle, do you have a copy of this intergovernmental agreement?
No.
Can you get us a copy?
Actually, it's outlined in school code.
Okay.
So, like
State-
it's compiled statute.
Okay, that's...
So it's just, sorry, our section, we just call it school code, but
So it was created here locally.
it's not a local intergovernmental agreement, it's the parameters that are set out in legislation.
We agreed to what the state said.
Correct.
Okay.
And that's where the EAV piece came in.
But he's already covered with this year's budget, right?
No, this
So
is
that's what
this
he's
year. This is this year.
Look, got a bunch of problem with that.
Good
Greg,
chance
thanks for
of
doing
that.
that. We would have never understood the magnitude if had you not done this. And my thought is, then where does it stop? If we continue with what we have here, then is probation going to come back? And I don't...
That's what I was thinking.
Looks like a lot of cakewalks.
I wasn't sure what the fiscal year's.
We run this budget with your fiscal year. So we actually run our books with about 5 different fiscal years.
That ought to
So
be a thrill.
this money is tied to the June 30th end fiscal year.
Okay.
And it's only used for those pieces that are in statute. So it has to do with teacher licensure, it has to do with GED, has to do with truancy, bus drivers. Those are the components that are paid for with these funds.
Well, Kankakee heads the direction they are, feeling there's going to be some challenges, so maybe you can find us a carrot on the string or something.
Well, we went through it, and I thought that was, that was tough on all of us. Remember sitting around this table,
Oh, yeah.
but I don't think Kankakee's got any, we have nothing on Kankakee. That's got to be...
They were not proactive. It
No,
was coming.
we were
Everybody pointed
proactive.
it.
We saw it coming.
Sure changed labor negotiations, I know that.
So you're asking to maintain?
Simply to maintain the budget that was approved.
Well, that is a pickle. Because what if they adjust it down again? But it's a future implementation there, because we're 70, and some 25.
You never know, it might be 50%.
Yeah.
Mm-hmm.
Is that going to be a future 50% type thing, or,
Yeah.
I don't know. We got to look into
40%
this.
of the population?
Question for the state.
Never off the top of my head.
Wish he was here, but he's not, so,
He's got a trial.
yeah. So we'll have to look into
He
it,
would be aware
see
of
what
what
he
he
come up with.
Okay.
And we're not planning on trying to hurt you.
Well,
We don't know if we're going to get hurt.
But I'm not willing to do things without you knowing exactly
Appreciate
what
you.
our office is doing.
Yeah.
That's first and
Yeah,
foremost.
at this point, the only thing I can say is thanks for the heads up.
Yeah.
Because something will be happening if I look at it. And we'll keep him on.
Joe, Keith?
I'm thinking that you were talking about the next budget and whether they cut it again. If that happens, we won't vote for more money than Kankakee. We'll vote,
But see,
budget
there,
out the 25% that we're supposed to pay.
but,
So then it'll be a big cut for us next year.
yeah,
But it'll
but,
be a big cut for the whole department.
yeah, that's what his issue is.
And I don't know whether with the intergovernmental agreement, we can decide that we want to put an extra funding in that or not, so.
I don't even know if we got the choice. I don't know what the rules say.
But since we've already voted it through, clear through the full county board, the funds are there, I don't see why we don't let it go through this year and then figure out what's on for next year.
Well, we'll have to check the rules and see, try to do it right.
It's budgeted at this point, budgeted.
It is.
So you're good from us until the end of June?
Well, no, I mean, we're talking about...
Dale? Excuse me.
That this would be that the budgeted number would stay the number that would be paid through the end of November. That's really the question.
We're good as long as our partners, that's not the contract.
Yeah. Dale, you had a question?
Then we'll look at our options.
Just the situation that this change in Kankakee County was reported to the county board before, and the decision was made by the prior chairman that it wasn't going to change, and nobody questioned it at that time. Now I realize there's no more information that's come out, and nothing there obviously is cut in stone. So I guess my thing is the chairman wasn't questioned at all when he suggested or absolutely said that the budget was passed and that's the way it's going to stay. So we've had a change in chairman at this point. But there were other things that the prior chairman didn't get questioned on and was allowed to do, so why don't we allow
Well, we would have
do
to
this?
open the budget to change it anyway. And-
No.
No, it's in the...
This is what we're budgeted. Kankakee lowered theirs
I
below the
understand, but if
agreement.
we were gonna cut that, oh, yeah, we're
Oh,
cutting.
you-
No, we're,
Yeah, all right, I was thinking the wrong way.
he's asking for us to maintain so they can continue on, and I'm okay with that.
During the time that Iroquois County was having budget issues, we did have 1 year. Traditionally, what happens with our budget is we work to underfund, because if we bring a grant in that can absorb a portion of administrative assistant or some of our payroll tax services, we lower our requirement. So at the end of the year, for the past 10 years, this year being the only exception, the county's always received a refund from the ICANN regional office.
That's good to know.
So the year that that Iroquois wasn't able to make the full payment, what had happened is when we did refunds, that was factored in, and that's where we worked backwards with 76-24% ratio, and that's in that year that's how we adjusted. It was done on a refund basis as opposed to on the revenue side. Clearly, this year we're talking about numbers that are much larger than we were back in those, during that budget time.
I'm okay with leaving ours the same and talking about this when we get into budget next year, but because I don't know if a lot of people understand the Regional Office of Education, you guys train and give all the extra training for the teachers that are in the classroom, all of the safety regulations, they do a magnitude of stuff that if we didn't have the regional office, our school districts would have to pay this money out for private services, and hopefully Kankakee County will see that we're willing to step in and help them out, but by golly, when it comes next fiscal year, they need to ante up.
Well, I don't know if they'll be able to. I mean, it doesn't matter one. I'm
This-
sure they
this
don't
will
want
help
to
give them a little
They don't
break.
want to hurt anybody any more than we do. But you look at, what was our year in there in December, like 18,000? And we don't know what we're getting cut, so it might not be a choice, you know.
And we don't know if regional offices are on the chopping block with the
Well,
merging of all the government.
yeah, I don't know, they're after, you look at the townships, they're after the assessors, and I don't understand their logic there, because the cost on these assessors is cheap compared to what's gonna cost if we have to hire them, you know. So, I don't know, but we'll try to get an opinion from the state's attorney, and we got people here that are definitely pro-you, so,
Well, I appreciate that, and I appreciate your time.
yeah, thank you.
Thank you.
But I agree with Dale, the former chairman took action without all of our approval. Why can't we all agree that we maintain his budget until the end of our fiscal year because we're good to go?
Make a motion for that effect, and, Susan, and put it in the minutes.
Was it done right,
they'll be on right.
I don't know.
Yeah.
I don't know.
That's the state's attorney.
Good
Yeah,
point.
I think we all,
let's just check
I
it
think
out.
we all want to give him the money,
Mhm.
Yeah, ain't nobody wants to
but
hurt
that's the state's
well,
attorney.
you know, our
Yeah.
school system.
We don't want to kick them in the leg.
No, I mean, there's no, we try to do this right and not hurt anybody if we can help them. So let's keep that in mind. We're not Grinch here. We're not here to whack anybody just because we can. And I'm sure that's what Rob was thinking. He, you know,
Well, Carl Brown would be coming back, hey, you gave Greg some money.
so,
You didn't hear that, did
He
you?
didn't hear it.
Good.
Are you on an intergovernmental agreement too, though?
No.
Yeah, that's the difference.
for the same circuit there. Well, thank you.
All right, thank you.
Okay, anybody here anymore on possible state reduction?
Nope.
I haven't heard anything either. That's good news. Well, you're more on the inside than us. You got anything?
I know nothing.
End of June, it will all fly out.
Might actually have a, what's HMEP budget or grant discussion?
I'll ask you that.
Eric?
HMEP concerns new Iroquois County LAPC. HMEP grant was a grant that we previously received, but the grant has changed just a little bit in our favor. It used to be an 80-20 match, Lake County had to match 20%. Now, if we keep underneath the pre-designated threshold, which in this case is exactly $7,157.66, you can ask the state to match 20%, while the federal match is 80%. So, with the Iroquois County LAPC, we formed just in time to apply for this grant, which you have before you. And I applied for exactly the previous stated amount.
Hazardous
And
material,
you can see it split up there. What this grant money will be used for is preparedness activities, and can only be used for preparedness activities of the LAPC. Response, or actual buying hazardous material response equipment. So some of the things that are in here include some of the deliverables that we need to perform for the state, including
Hazardous
writing and
material.
distributing a hazardous materials emergency plan, which I'm currently working on. Also, a annual exercise, which we'll probably be doing a tabletop exercise, lower funds. And then also, there's 2 conferences that this grant will pay for. So one is the IEMA conference, and so we're allowed to send 2 people there. And then the other is the Winnebago conference, they call it, Winnebago LAPC, and they have an annual conference, which I haven't been to. This fiscal year starts for this grant on October of this year, this whole year. So what I'm asking for is for the county to open up the budget and for the exact amount of $7,157.66, because the state cannot reimburse us directly, obviously. So, understanding that all this should be coming back straight to the county, 100% reimbursable, as long as this is approved, asking the county to open up this much money.
Do you have a grant award? You don't know if we're awarded
No,
at
we
this
have
point?
not been awarded yet.
Okay. And it's related to the, fiscal year starting October 2015?
That's correct.
So the expenses would be incurred after October 2015?
That's correct. No expenses are being incurred right now.
So there would be the expenses would be in October and November of the next fiscal year?
October, November, yep, and next fiscal year.
Address that in that one.
I think they do award letter first.
And
Is this a competitive grant, or is you don't know if it's guaranteed that you're going to get it, so?
of course, I'm not going to say it's guaranteed until I get it. I don't want to speak for the state, obviously, but it's not competitive. Every county is supposed to have a local emergency planning committee. Every county does, or they have a, like a better term, a dead LADC, where the members of the LADC are moved out of their county or actually dead. We have a new LADC that is working. And like I said, the amount that we apply for is the prescribed top limit for Iroquois County to apply for if we didn't want to match funds ourselves. If we were to match funds ourselves, match 20% ourselves instead of the state, then we could be eligible to acquire redistributed funds from those counties that don't get all the funds they apply for. So in short, this is not competitive, but have not been rewarded yet.
It's applied for though.
It is applied for, which
They're gonna give you like a heads up when you need to fund the money?
perhaps, never applied for this grant before.
Is there a window of when you're supposed to spend? Because a lot of times with grants, you've got to purchase stuff, you can't purchase stuff until a certain date, and usually that's on the award letter, so,
All the money does need to be spent within the fiscal year
okay.
through October, and then into the 10th of September. In my grant experience for EMA with the EMPG, I know that they're getting very specific about how the money is spent and when the money is spent, when you're getting your quarterly reimbursement. So,
Really, I guess when we get the notification of the award.
that's understandable.
That's when we need to be able to come up with money.
And it's been less than a month when you applied, right?
That's correct.
And all we do is front it.
Can we do that line item?
Well, what you would do, it depends on, he's talking about expenses crossing the fiscal year. So you would open in this year's budget in the grant fund, 390. So if you go to your group here, if you go to page, I don't know what the page number is, but it's Fund 390. We would add two lines, one account number for the revenue and one account number for the expense. But you would only open the budget for the amount of revenue and expense to be incurred in this fiscal year. The amount to be incurred in next fiscal year would be included in the FY16 budget process. Okay?
Yep.
I was looking down and said,
And when is the IEMA conference?
The conference is in September. This grant we won't be sending anybody from the LADC this September. I go under EMPG grant, but no one from the other two is going this September. And if they do, it's on their own time. And their own time.
So we got time here then.
You have time, so if you don't just want to table this right now, you just need to.
It's good to be informed.
Yeah. I don't know, we need to take any action at this point.
Did you want this back, Eric?
Once we get the award.
We've all seen it.
Okay, and you need a copy?
I have a copy.
Does anybody else need a copy? Kevin?
Thank you.
Usually if I got questions, we end up going there. She keeps track of it better than I do. It's bad in my car.
Is there any further questions about this?
No.
In the meantime, thank you very much.
Thank you.
You know,
That's it, so we go to claims.
sounds like it should be in solid waste.
Somebody go through the claims?
So moved.
Second. So you approve the claims. Any old business? Oh, Kevin, go. Oh, my.
No.
Yeah.
Linden?
Yes.
Raymond?
Yes.
Hanson?
Yeah. So we approve the claims. Old business? New business? Anybody want to adjourn?
So moved.
Anybody want a second?
I'll second. We'll do anything else today.
All in favor, say aye.
Aye.
Oh, I got my bathroom.
Wow. You probably got some, all these girls sitting there coughing and